Welcome everyone. Thank you for joining us for another segment of Insights with Team Emerald. My name is Damian Gallagher and I'm on the Business Development and Client Services team here. And today I'm joined by our Director of Research and Small Cap Growth Portfolio Manager, Joe Garner. Thanks for joining us, Joe.
Thank you, Damian.
Today we're going to be really just doing an unpacking of the second quarter of 2024 earnings and in particular the small cap earnings. So why don't we get things started? Just Joe, how were earnings in the second quarter for small caps?
Probably better than you and most people would think. And the reason I say that is that we've come through a summer where it's largely been a macro-dominated market. People have been fixated on, is inflation calming down? Is employment hanging in? What's going on in terms of the election outlook? And we've certainly had a number of twists and turns with that. And that's really what's been driving much of the market. But when you look underneath and what we're seeing in terms of company fundamentals coming out of earnings season, particularly in the small cap portion of the market, it looks like an interesting turning point that's going on. According to our friends at Fury Research, this looks like it could be the first time in the last 5 quarters that we will have positive earnings growth from the small cap sector. And it's really set up to accelerate from there going into 2025. We had nearly 2/3 of companies beating earnings estimates this quarter, a relatively healthy environment. It was also, like last quarter, relatively broad-based, some sectors better than others, but relatively broad-based. So really a relatively healthy undercurrent underneath a macro-driven marketplace.
All right, great. So it sounds like small caps really are set then to be up in terms of earnings on a year-over-year basis. Within the general small cap earnings marketplace, were there any segments or sectors within the market that interested you in particular?
Yeah, I mean, I think we saw the best growth rates in areas like healthcare, technology, financials. And, when you kind of look within that a little bit, within the technology space, continue to see the impact of the AI infrastructure build out. Really not a surprise to anyone other than perhaps the magnitude and the speed with which we're seeing it happen, particularly driving a lot of those hardware companies, particularly those leveraged to the data center. Within the financial space, we're starting to see it in a lot of strength you're seeing is in areas like insurance, specialty insurance driving the market. We're also seeing those who are service providers and marketing partners into the insurance market. As we've seen rates kind of catch up with the inflationary market that they experienced in the last few years, we're starting to see market spend come back, investments in customer acquisition spend come back, and that's helping that portion of the market. And within industrials, one of the stronger themes that we've seen in the marketplace this year has been the strength of the aerospace aftermarket. We all know the struggles Boeing has been having in getting new aircraft to market, forcing airlines to fly existing aircraft harder and longer than they had anticipated, which is driving that demand for aftermarket parts, maintenance, and repair services, which is resulting in some very interesting earnings growth, particularly in the small cap portion of the market.
All right, well, it sounds like a lot is happening within small caps. Large caps have, as we all know, held the spotlight really in terms of earnings growth and performance for the last however many years.
Right.
But do you see an inflection point where small caps might actually outpace earnings growth over that of their larger constituents?
I think we're setting up for that. Now, a lot of it's going to depend on, we had positive commentary from the Fed last week. Looks like we're getting ready to start going into a process of interest rate cuts versus interest rate increases that we've seen over the last few years. We think that would be a powerful cyclical backdrop to the economy, and small caps do tend to benefit in that type of environment. Again, from our friends at Fury Research, you saw a year last year, like you referenced, where large cap earnings growth was well in excess of small cap earnings growth. This year, it looks like we could see small cap earnings outpace large cap earnings by a few hundred basis points. And we think going into next year, that gap becomes a lot wider. So I think there's a lot of catch up, and I think we've got the fundamental backdrop for that catch up process to happen.
All right. Well, sounds like a lot of exciting things happening within the market and within small caps. So let's hope that trend continues. I want to thank you for your time today. I want to remind everyone that's watching to please check back on our website, teamemerald.com, the news and insights page for further updates and Emerald Insights. And thank you again for joining us. Thanks,
Thank
Joe.
you. All right.